All right, good afternoon. Thank you all for spending your afternoon with us today. This is our first live webinar. If you have any questions throughout the webinar, you can put them in the chat box so we can answer those accordingly. We will put everyone on mute to control the background noise during the whole presentation. And at the end of the webinar, we will actually choose 2 prize winners. All right, so this is our team here at UL Federal Credit Union. Keely has been with us here at the credit union for 4 years and has been in banking for 9 years. Jason has been in the credit union world for 4 years and in banking for over 22. And I'm Nadine. I've been here at the credit union for nearly 5 years now and been in banking for over 8. Our agenda for today's presentation: what is a mortgage? What does homeownership mean? Things you need to know before you purchase a home, your credit, the mortgage process, and appraisals. What is a mortgage? A mortgage is a loan to purchase a home or purchase land, and there are different types of mortgages. There are fixed rate mortgages, meaning there's a fixed interest rate for the entire life of the loan. Variable rate mortgages, which means the interest rate can increase or decrease through the life of the loan. Home equity loans are typically fixed rate. They could be first or second mortgages. And the home equity line of credit, known as the HELOCs, it works similar to your credit card. You can actually withdraw funds through the life of the draw period. Home equity loans and HELOCs can be used for large purchases, such as installing in-ground pools, student tuitions, home remodels, repairs. Interest rates are usually more favorable than consumer loans due to the nature of the collateral. So what does homeownership mean? Well, it's the American dream, and the American dream is still very much alive today. Renting versus owning. What's best for you? Homeownership is not for everyone. Not everyone's prepared for the costs or have an understanding of exactly what homeownership consists of. It's an investment. It's considered a forced savings account as you build equity with every monthly payment. And equity is the value versus what's owed. It's the difference between the value versus what is owed.
Right.
You always want to consider taxes, insurance, and maintenance. For taxes, this home, are you going to have to pay parish and city taxes? Are you going to be required to obtain flood insurance? Deductibles for insurances can be quite pricey, and you're most likely to pay your hurricane deductible in the state of Louisiana. Mobile home insurances are more expensive, and it is harder to find insurance companies that offer homeowners insurance for mobile homes as well. So that's always something you want to keep in mind when you're home shopping. Maintenance. If you're a renter, you pick up the phone, make a phone call, the repairs aren't your problem. When you're a homeowner, maintenance can be very expensive. You can move into your home and 2 weeks later have to replace an air conditioner that could cost you maybe $6,000. Income tax savings, interest, closing costs, and down payments may be tax deductible. Those are some items you want to provide to your tax professional the following year. Second mortgages nowadays no longer offer tax assistance. I know most people were using second mortgages to pay some interest, to claim those for taxes, but you can't anymore. I guess our best advice regarding all of that information, regarding your taxes and everything, is just to consult with your tax professional, just to make sure it's best for you and your thoughts on everything. It's exactly what you need it to be. Some things you need to know before you buy a home. The process can be lengthy. Once you find a home, a typical closing can happen in 30 to 45 days. Sometimes the process can take months. So what's your timeline? When does your rental lease end? For down payment, You may or may not need a down payment, but a down payment gives you a lot of leverage to negotiate rates and terms, especially with government-funded loans like FHA, Fannie Mae, VA loans. And how much can you afford? You always want to start with what you want your monthly payment to be. Think about all the services you currently have and that you pay for. Utilities, cable, lawn service. Are you going to have to buy extra equipment to take care of this new place? And which home is right for you? What do you want in your home? Do you want 2 stories? How many bedrooms do you need? Do you need a backyard fenced in for your animals? And your wants versus needs in your homes. Do you need ADA bathrooms? Do you need 15 acres? Is it a certain school zone you're trying to buy in? Do you have to have 5 bedrooms if you're only 2 people? Purchasing an older home could usually generates more maintenance costs as well. All right, do we have any questions?
We do have one question from Alicia. It says, can you talk about the credit score again?
Sure, Alicia, the credit score question that you have, we're actually going to begin a whole section of our credit that Ms. Keeley is going to get on and talk about. So if you have any other questions following that, just let us know.
That is all that I see right now.
Okay, perfect. We'll go ahead and continue.
Okay, everybody. Hi, I'm Keeley, and just to go over the credit portion of this presentation, a couple of things. Do you know your credit score? There's different apps and stuff available to use, but it's also a good idea to view your credit report at least once a year from a free site or with a financial counselor, which we do offer here at the UL Federal Credit Union. What is on your credit report? Bankruptcies, collections, payment history. A solid payment history on your credit bureau is what will help you maintain a higher credit score. What is not on your credit report? Items such as judgments, liens, rent, utilities. Those items will not show up on your credit reports. And financial checkup. We offer these free at the UL Federal Credit Union. And we also have a credit score tool available on our online banking and app. It's called Credit Sense. There you would be able to view your credit score so you can have an idea of where you stand. And your credit score. So data from your credit reports create a FICO score for each credit bureau. It can rank anywhere between 300 being the lowest and 850 being a much higher score. Scores change frequently depending on your credit behavior. So with your credit score, this can mean the difference between being denied or approved for credit. And it can also mean the difference in a higher or lower interest rate. So as you see here, 35% of your score is coming from payment history. So that's the biggest portion of it, is to pay your bills on time. Anything that's reporting to your credit bureau, we want to pay those on time or ahead of time so we can keep our scores up. And amounts owed is 30% of your credit score, the next largest section. This is in regards to the utilization on your revolving account, such as credit cards, line of credits. 30% of your credit score is based on balances to available limits. The lower your balances are to what your limits are, what will help better your score. So just with that, you don't want to get a bunch of credit cards and run them all up, because that's not going to help you any. But if you have credit cards that you use wisely and pay off in time, then those things will reflect positively on your credit bureau. So the effects of your credit behavior. So if you look at this chart here, we see a new home priced at $175,000, 30-year mortgage. Person A has a credit score of 730, person B 599, As you can see here, there's a difference, a big difference in the interest rate. And on the next line where it says monthly payment, this is almost a $400 difference in monthly payment for these two individuals, and which we're going back to is based on their credit scores. And if you look at the final line, you'll see where person B will pay $136,379.09 more than person A for the same exact house at the same exact price. So this kind of gives you a good idea of the importance of credit and how you can manage your money. When you have better credit, you can definitely manage your money better and not overpay for things you would need, such as mortgages. And with that said, I'm going to turn it back over to Ms. Nadine. And if there's any questions about that section, please let us know.
Yes, so I have two questions. I have one from Brandy. It says, if my credit is not so good, but I have a significant down payment, would that help?
Brandy, to answer your question, if you have a significant down payment, but your credit is not so good, can that help? Yes, it can help. Some lenders do offer points, meaning that you can buy points depending on how much money that you're putting down. So that could make a difference in your interest rate. But ultimately, you know, your goal, you just want to continue saving and continue just increasing your credit score as much as possible.
I have another one. It says, what happens during the financial check-in?
Okay, we have another question. What happens during the financial check-in? I believe here at this credit union, I believe we have 8 out of our 21 employees that are certified financial counselors. So we sit with you and review what you want. If it's savings, if it's budgeting, if it's credit, you need help, you know, paying your bills each month, for your future goals. That's our goal with you, is to help you think about the way you do things and the way you take care of your items in a different way. We see some people every time they get paid, whether it's biweekly or monthly. We might see some people once a year. For these kinds of things, we can pull your credit with you and review everything on there and give you advice, you know, to what we think may help you.
I have 2 more questions. The next one is, can you get home equity lines of credit on a rent house or a house you own but don't live in?
So we have another question. Can you get home equity line of credits on a home that you rent or don't live in? The answer is yes. You'll just need to find a lender that can provide that loan for you. That's considered an investment property. I know a lot of the bigger banks do handle those types of loans in the area. We don't here at the credit union handle investment properties.
Okay, and then can you talk more about Credit Sense, specifically where to find it? I do have the UL Credit Union app.
Okay. Can we talk a little bit more about Credit Sense? Our Credit Sense is on our online banking once you log in, and on our app. I believe when you log into our online banking, there's a little button on the right side talking about your credit score, credit-wise. It's something that we can go over with you if you're having trouble getting yourself set up for it. I do recommend, if you have UL Federal Credit Union app, that you do that. It is free to you. It's not a hard inquiry credit pull. And it does just kind of give you an idea of what's on your credit bureau, just to make sure everything is your trade lines and that they are reporting how they should be.
Okay, and I have one more question. Well, there's 2 more questions, but they're the same type of question. How do we make an appointment if we're wanting to get more information about financial checkups?
Okay. How are you wanting to make an appointment for the financial checkups? You can contact us directly. At the end of the presentation, you'll have our email addresses. Our website is www.ulfcu.com. You can call the receptionist desk and ask for any of us. It's up to you. You know, whatever's going to be easier. We can do those through Zoom virtually. If coming into the branch is not easy, we can do that over email. We can do it over phone, or you're more than welcome to come in for an appointment with us.
and we can get to the rest of the questions.
Okay, so we'll go ahead and talk a little bit about the mortgage process now. So the application process. You always want to apply as if you're filling out forms at a doctor's office, but with your financial information. You want to provide as much information as possible on those documents, and you want to turn in any paperwork that the lenders are asking for. It just makes everything so much easier. A pre-approval versus pre-qualification. The pre-approvals that most lenders give you, the pre-approval means that they have pulled credit, taken a look at your debt to income ratio, and the figures work out. A pre-qualification can mean that the lenders did not pull your credit. So they pre-approved you based off of the information you provided on the application. But once you were to sign contract on a home and submit it to your lender, and they do pull credit, they may deny you for the loan depending on what's on your credit and the score that's provided. So you want to keep that in mind. Maybe ask your lender what they'll provide and if they're pulling credit. It's just a good tip that I've seen. So when you're looking for a home, realtors can help, especially if you're not familiar with the area. Sellers actually pay realtors commission. It can help you find exactly what you're looking for. You tell them, look, I need 3-bedroom, 2-bath. I want this neighborhood or this area, this size. They can find everything on the market for you and alleviate some of the problems that you may have. It's just most people don't know that sellers pay realtors commission. Putting in an offer for a purchase agreement, again, the realtors can help a lot with that. They have that paperwork and can be that middle person between the buyer and seller, but you don't have to have them. Your lender, there's, basic documents, your lenders have those, a purchase agreement. They can help you, walk you through it. Inspections and appraisals. Those are good things to have. Not all lenders require inspections still. It gives you leverage to negotiate the price. Have the sellers do some repairs before you buy it and or back out of the deal if you think it's a money pit. Before you get too far into the process, it's always good to know. And for title work, you want to be sure that you choose a reputable title company because that can protect you, your investment, and the lender. The buyer always chooses the title company. So you want to keep that in mind too. And if you don't know any in the area, you're not familiar with that process, ask your lender, ask your realtor, ask some friends, see who they used, if they have someone to recommend for you. And for insurance, are you going to be required to obtain flood insurance? Is flood insurance expensive for this home? Maybe an elevation flood certificate can help. You would call a surveyor to get that done. You would just have to ask your lender for that process. For hazard insurance, which is your homeowner's insurance, you always want to get a few quotes. Maybe call a couple of different agents, get at least 3 typically. And for closing, you always want to be mindful whenever you set closing. Scheduling, the location, what you need to bring. You want to allot enough time for the closing. You want to be sure that you ask all the questions you have, especially if you're unsure of what they're asking you to sign. This is a huge investment for you not to understand, and there's no stupid questions in this process. All right, so questions you want to ask a mortgage professional. I know a lot of people like to shop mortgage lenders, and that's a good thing too, just to see what's out there and what type of loans they offer. Origination fees and processing fees. Some of these fees lenders charge are based off of the loan amount. Some are a set dollar amount. Some you need to pay up front. Some are in the closing costs. So you want to just ask what this loan is going to cost you. And escrow. Are you going to pay your taxes and insurance monthly when you pay your principal and interest to your lender? Or are you going to have to pay that out of pocket annually? You always want to know those items up front. Will your loan be sold? Meaning after closing, you think you're going to go pay company A each month for your loan, but they've sold it off and now you have to go and figure out and pay company B. So that's always good to know upfront as well, just to keep in mind. Closing costs. You always want to ask those questions. Typically, when you get pre-approved or pre-qualified for the loan, Your lender will send you a loan estimate, and there's estimates on there. That gives you an idea of closing costs depending on loan amount. But you always want to keep in mind exactly, what those figures are, even though they're estimates. And private mortgage insurance. PMI, if you're financing over 80% of your home's appraisal value, it protects the lender in case you would default on the loan. And it's included into your monthly note with escrow. Once your loan is under 80% of the loan to value, you want to call your lender to see about dropping the PMI portion. And most lenders won't drop it for you. You'll have to request it. PMI can make or break the deal. Sometimes, you want to save a little more money, not empty your savings account to purchase the home, things like that. It can help, most definitely. But you want to remember, it protects the lender in case you default on the loan. So it's just like paying a ton of interest, like on the credit slide we were showing you earlier. It doesn't really have a benefit to you for long periods of time. All right, let's talk a little bit about appraisals. Assessing the values of the homes. There are a lot of things that come into play when you're dealing with appraisals. The square footage of your home, the acreage of the property, the comparables in the area, depreciation factor, school district, amenities. So for the comparables, it could be hard to find if your home is considered unique or in a rural area. And if that's the case, you always want to keep in mind, for, let's say, if your home's over $300,000, it may be a little harder. It might take a little longer for you to sell that rather than a home that's in the $150,000 range, depending on the area, depending on the acreage. Some people want more house and less land. Some people want more land and less house. So it just depends on the market at the time. For depreciation, regular maintenance is very important. And the longer you're going to neglect your home, the longer it will take you and the more it will cost for you to bring your home up to date. Maintenance is an eye-opener for a lot of people who are first-time home buyers. It's very expensive. It can be. And that goes back to, maybe we should get PMI for a little while so we don't empty our savings account. You want to be sure you're not buying too much house and that you can afford to upkeep it, that you can afford your deductibles, that you can just afford to maintain, what's there. Amenities on appraisals that can help with values. Some things in the area: pools, shops, carports, outdoor kitchens, garages, fence, landscaping, things like that actually improve the value of the properties. And that all of those pieces can kind of go back to previous slides when we were talking about, what do you want versus what you need. You always want to keep those items in mind as well, because the more of those items you're going to want, the more it's going to cost for the home. All right, do we have any other questions?
Yes, we have two questions. Does each inquiry about our credit score decrease our score?
Okay, it's a good question. Does each inquiry on our credit score decrease our score? If it's a hard inquiry, if it's a lender pulling it for a loan, yes, it will decrease your score, but not significantly. About 3 to 5 points per inquiry, it can decrease your score. Now, those inquiries do stay on your credit bureau for 24 months. So typically we'll see, let's say 5 to 10 on a credit bureau. That's normal. But when you have a significant amount of those that stay on your credit bureau for 24 months, it can decrease your score a significant amount.
Okay, and then going back to credit checks, what did you mean by hard pulls? I thought there was no difference in a credit check.
Okay, good question. On credit check, what did you mean by hard pulls? A hard pull on a credit check is an inquiry, which when you apply for a loan, those are inquiries that stay on your credit bureau. Now on Credit Sense, it doesn't pull your credits every time you go to inquire about your score. So that's considered what we call a soft pull in the lending world, because it's not going to report on there that you checked your credit. But if you go to apply for a lender and pull credit, that's a hard pull that'll stay on your credit bureau.
Last one that I see, oh, no, they have two I would like to get into real estate but haven't purchased a home yet, would buying a rental property before purchasing a home bring down my debt to income ratio?
So you can see it. Sorry. Okay, if I would like to get into real estate but haven't purchased a home yet, would buying a rental property before purchasing a home bring down my debt to income ratio? Well, that depends. As lenders, we only count 75% of your rental income that you're collecting off that property. So if your monthly note on that property is $600 and your rental income is $600, actually, we're going to be decreasing the amount of income that you're receiving. So you will have a portion of that monthly payment reporting on your debt to income ratio.
Does ULFCU members have benefits and or perks in applying for a loan with the credit union rather than applying with another home mortgage company?
Okay. Do ULFCU members have benefits and or perks in applying for a loan with the credit union rather than applying with another home mortgage company? Our perks here, once you become a member of UL Federal Credit Union, I guess the generalization of the real estate world and the mortgage, they're all kind of the same rules. The only thing that I can tell you about having your mortgage loan here is that, we showed you the slides of my team. You call myself, Keely, or Jason directly. You have us for your accounts, for your loans here, for your real estate, for your mortgage. You can walk into our office at any time. To me, keeping the small credit union world compared to the larger banks out there, that's just a win-win nowadays. Okay. So with all that being said, actually, about UL, we serve UL alumni and SLCC, and we do offer the same consumer services that banks offer, typically at lower rates. We've opened the credit union September 1958, so we're actually celebrating our 63rd year in business. Typically, we can save you money with a full suite of products and services compared to some of the banks. And I mean, we do encourage you to join a credit union. We have seen a lot of people change their lives around from joining credit unions. So we do have a few things coming up here at the credit union we like to advertise. We are hosting our second year. This is the second year that we're hosting our virtual annual meeting. It's for our members who are currently in good standing with us to attend, and we have added the link here if you choose to register. And in May, we are having an auto loan special. Your first payment will be set 90 days from the date of your loan closing. And when you do book an auto loan with us in the month of May, during the promotion, you receive a gift card for a free car wash as well, while supplies last. All right, let's see. I can pull it up here. Okay, we do have another question here before we proceed. Will it hurt or help your credit with having things removed from your credit history? That's a good question. Being removed, is that late payments, collections being removed, trade lines being removed? It just depends. So if it's a collection account that's unpaid, the best thing to do is pay it. You want it to show paid. If it's a charge-off account, you want it to show paid. That's the best thing that you can do, is to catch up with you have, because those items are negatively affecting your credit score. So by paying those and taking care of them can help. Okay, we have another question from Kat. Let's see. I just have a savings account at the credit union. Do I need a specific type of account for loans or letters, lines of credit? You don't. As long as you have your membership here with us at the credit union, which is just a savings account, you can open any other accounts. You can apply for any loans. All of our free services, our credit sense, online banking, financial counseling, everything is free to you as well. Okay, we have one other question. Do you have any specific loan for first-time home buyers in ULFCU? What we offer here in-house is a conventional mortgage. There is a first-time homebuyers program that's offered through Lafayette Consolidated Government if you purchase a home within Lafayette Parish. That is through a different lender, but we do work hand in hand to get that in place for you. The last time we did work with the Lafayette Consolidated Government, they were able to help our member with $8,000 towards their down payment because they were first-time home buyers. All right, so all the questions for now. So here are our email addresses for our team. We thank you for participating in our first virtual home buying seminar. If we're not able to get to any questions today, you can email us. Or if you have any specific questions for our staff members, you can email us or give us a call as well.